Hi everyone and welcome to today's morning report chart analysis videos on Tuesday the 4th of October with me, Richard Perry, market analyst at Handset Markets. We've got a pretty strong start to the European session. It's FTSE that's driving it, or more specifically sterling weakness. Sterling has now broken below the key low at 27.96. And this was the low that we saw post-Brexit. The initial Brexit fall-off then carried on going to 27.96, then consolidated sideways, but we've seen in the last sort of few weeks the continued sort of sterling weakness, and actually we're getting a combination of sterling weakness and dollar strength today, which is pulling sterling below that key level. Now, as you can see on this chart, there is zero support back until 1985. That's incredible. So there's basically nothing to support sterling whatsoever at these levels. And certainly if we get a closing sort of breakdown below 27.96, that would open up the way lower. You'd also argue that's a downside break from a consolidation range. I'll talk about that in my chart appraisals. But certainly today we're seeing sterling weakness and also, as I said, dollar strength. Now we're seeing that dollar strength on the back of, here's the dollar index, and dollar strength on the back of strong ISM manufacturing data yesterday, and also comments from Loretta Mester overnight that were hawkish, and markets are sort of factoring all that in now in terms of what that's doing to bond yields. We've seen the 2-year pushing strongly higher on those comments from Loretta Mester, and also the 10-year helping as well. So we're seeing a steepening of the yield curve, although that hasn't really been sort of shown on the 2s-10s spread, but certainly that improvement in the 2-year yield yesterday will certainly sort of mean the market is sort of moving more towards the December rate hike, I think, now, if it wasn't already. So we've seen this strength on the dollar hitting across markets, really. We've seen a lot of really important levels that are being tested now on some of these key markets, dollar yen being one of them. The gold chart continues to sort of drop back towards the medium-term support. All these I'll be talking about in my chart analysis videos in a bit, but certainly these are key markets that are being tested by this dollar strength. So what are we looking forward to today? Well, we haven't got a great deal to go on really in terms of the economic calendar. We've had out overnight the RBA rates decision kept at 1.5%. The Aussie is slightly performing better than other forex majors today on the back of this decision to hold rates pat on, or stand pat on, the RBA. But generally speaking, not a great deal to go on today. You've got the UK construction PMI at 9:30, expected to be at 49. So basically in line with where we were last month, but considering we had a much stronger than expected manufacturing data, maybe we could see a better construction data from the UK as well. But generally speaking, the sterling is still under pressure, but you could see a bit of a jump possibly, although construction is around about sort of 6-7% of the economy, so it's not a great deal today. But with that in mind, I wish you good luck in your trading today. Throughout the next month, I'm splitting out my charts into the Lucky 8 competition that we're running at Handtech Markets, and I'll be doing that as my next analysis video, so tune in for that. Thank you very much, and I'll speak to you later.